Okay, so today I am with Justin and we are going to demonstrate how to prepare an income statement and a balance sheet. So, which exercise are we using, Justin?
We are going to use question 6 in the tutorial questions, which is Devi's laundry.
Okay, so as you can see here, we have laid out income statement and balance sheet on the board already. All we've done is just really write out the main categories and the heading. Don't forget the heading. Okay, so what do we do next?
Okay, the first thing we need to do is we need to complete our income statement. And we do that first because we need to calculate the profit to show the profit in our balance sheet. So the first thing that we should do is we look at the accounts and we determine which accounts belong where. So I'm starting with the income statement. So I want to start with my income. When I look at the accounts, I see that there's only one income item, and that is the laundry revenue. So I'm going to write in under income, laundry revenue. And that amount is $150,900. $150,900. Because this is a laundry service, there's no cost of goods sold. There's no product sold, so no cost of goods sold, so there's no need for the gross profit. So after I've done this, I know that my next item would be to find my expenses. This is where we want to point out that you really need to look at the additional information. In the additional information, you see that depreciation for equipment is $7,000. We learned this week that depreciation belongs on both the income statement and the balance sheet. On the income statement, we're going to show depreciation as an expense. This shows the value of our equipment as we've used it, decreasing. So we have $7,000 expense for depreciation. After that, I'm going to find any other expenses we might have. The first expense I see is the salary expense. So I'll add that as well. And the salaries expense was $61,400. Now maybe we'll finish this off camera and we'll come back and show the answer. Okay, we're back with our completed income statement. Again, we have our income minus all of our expenses, including that depreciation. And that gives us a final net profit of $30,150. Now we know that the profit belongs to the owner, and so we need to move that profit to the equity section of our balance sheet. So in the equity, I'm going to add net profit, and in this example, we have $30,150. Now I also want to point out some challenging things that we might not have seen last week. One is in our non-current asset section. Our non-current asset includes our equipment. Okay, our equipment is a non-current asset, and the value of our equipment is $105,100. But we also see that we have the depreciation of the equipment. We need to show the equipment value decreasing by using the accumulated depreciation account. And we see that accumulated depreciation is $40,200. But we just showed $7,000 for depreciation expense this year. That means we need to add that expense to the accumulated depreciation. So that gives us accumulated depreciation, AD accumulated depreciation for the equipment of $47,200. And that amount is negative. That's a contra asset. It's negative. And again, this is $40,200 plus the $7,000 from this year. And then we have our net book value for the equipment. And that equals 57,900. Our current assets, our current liabilities or non-current liabilities should be the same as last week. No special items, no special accounts here. We'll show you the end result in a minute. So I'm going to move back to the equity. We already added the net profit. The other part of equity is the capital. T. Smith Capital, 37,800. So I'm going to put capital here, 37,800. There's one more part of equity, and that's the drawings of 2,000. The drawing is when the owner takes the profit for their personal use. So the drawings is actually negative equity. So I'm going to put that drawing right here, and I'm going to show that as negative equity. It decreases the value of our equity. And now we'll go away and we'll complete this and we'll show you the final answer. Now completed our balance sheet. We filled out our asset section. Our non-current assets we showed in the video. Our liabilities, we only had current liability, no non-current. And then our equity section. And you see that our total assets, 72,050, equals our total liabilities plus equity of 72,050. So our balance sheet balances, and we're very happy. So one thing to point out as a reminder, we always need to look at that additional information. In this example, we had $7,000 depreciation. We also need to remember to take our net profit and move that into our equity section. And then the last, in this example, is we needed to increase our accumulated depreciation for the additional $7,000 of depreciation. If you do all of that, you should be able to complete the question.
Okay. One question, Justin. Does it matter which format I'm using for the balance sheet?
Okay, as we talked about in class last week, there's two formats. The T format that we're using here, or the narrative format, which is the up and down vertical. In this question, it doesn't tell us which format, so we can use whatever format we want. Okay, so we just need to read carefully the directions to know if we need this format, the T format, or the other one, the narrative. And this one doesn't matter.
Okay, and last point is always remember to start with the income statement when you have to prepare both, and read the requirement. Some exercises ask you to prepare one financial statement or the other, and some exercises like this one ask you to prepare both. So make sure you read all the information carefully. And that's it for today. I hope this helped. Thank you, Justin, and see you.
Good luck.